Adam Street in venture, well, globally we sit as a team on more than 550 advisory boards just in the primary team, so it's pretty comprehensive coverage. In venture capital, that's about 90%. So what does that mean? It means we're really close to our managers. Oftentimes we've been with them since the onset, so a long period of time. Advisory board is a nice badge, but in actual fact, it's hopefully just a reflection of our relationship. Myself, I'm probably on over 25 advisory boards at this time. Why is it important and how does it affect our investment philosophy? Everything comes down to people, and our advisory boards give us a really genuine, closer relationships with our managers. The advisory boards do facilitate that, but they're also just emblematic of what we think is a deeper, richer connection with our managers. So oftentimes we'll have coffee, lunch, phone calls, especially when things are going wrong or if they need a bit of advice, before actually coming to the advisory board. So what does that all add up to in terms of your philosophy? It's really being close to our investments. It's really having a mutual relationship. We always smile, but the reality is there's oftentimes bad news or critical points to be made. So we've got to be bad cop as well as good cop. And I think over the long term, that feeds into our investment philosophy of we're custodians and fiduciary and have strong fiduciary duty to our own clients to manage their capital. And we think we can do a better job with closer relationships, whether it's advisory boards or otherwise, in being custodians, but also helping to optimize for success. So it's good to be a good cop and help people galvanize their investment performance to the benefit of our clients. So that's how we think about advisory boards. Sure. So in venture capital right now, there's only really one theme that matters, which is AI. I think you saw it from the numbers that we shared at the keynote speech this morning. The market's down 40% across every other sector apart from AI, which is up 300%. And in terms of amount invested into AI in 22, it was 6 billion. In 23, it was 25 billion. So in terms of themes, it couldn't be any more stark with regards to AI and non-AI. That's not to say everything that's not AI isn't attractive, and I think that's, the market can overswing in terms of attraction and too much limelight, and that might be actually going on as well. So I think it's also about being balanced and measured throughout these periods where there's a lot of excitement. I think in reality, we're at the very early stages of AI. We're in the build phase, if you will, infrastructure, capital intense. As that develops, think about it as a marathon, like the starter gun's gone off. We're not even ran mile one. We've got a whole marathon ahead of us. And I think it's about having a good global view, appropriate governance to make sure that we're measured, but also being positive and being thoughtful about, well, this isn't something to be ignored either, and how it will play out, taking an appropriate diversification and portfolio. We're predominantly early stage investors, and that allows us to build what we think portfolios in the most attractive spaces in AI and otherwise across the world, that hopefully gives our clients access to some of the great companies that are in the middle of getting built right now. Yeah, sure. So with regards to emerging markets, we do de minimis amounts of emerging markets, truthful. We do keep an eye on things. Companies can come from everywhere, and some of the markets you mentioned, specifically Eastern Europe, Estonia, for instance, Bucharest, have created huge, fantastic companies. So these are markets that you absolutely cannot ignore. I don't really put them in emerging markets. That's why I kind of squint at the question a little bit. With regards to Africa, it's more kind of buyout phase. But within venture capital, the truth is that globalization of innovation is real. It's no longer a Silicon Valley monopoly. And therefore, having a global firm like Adam Street in order to cover these markets in an effective way is really our duty because of the dispersion of these companies. So what are the numbers on that? You look at Europe, including Eastern Europe, the reality is that Europe's created over 550 unicorns or billion-dollar companies over the last 25 years. There's been a huge acceleration. We think it's going to continue for good reason. But those 550 companies have come from 65 different cities in Europe, so highly dispersed, which is very different from Silicon Valley, which is a power law. It's very, very concentrated. So that in itself, Europe having a dedicated team here that's been around for a long period of time, it's got lots of relationships, that gives us a network effect that helps us cover what is already quite a dispersed market, is part of hopefully the value that we bring when we make investments, back to the philosophy point. So Europe's a dispersed market. It's going to continue to be dispersed. Having a dedicated team to cover that is really important. And Eastern Europe has been a huge contribution to some great companies, and we think it will continue. Yeah, sure. European venture. I don't think it's been overlooked. I think it just has been underappreciated. So what are the stats that would back that statement up? Adam Street's been invested in venture capital for over 50 years. We began investing in venture capital back in 1972. We've got great information. Our realized performance in the US, we can compare to other regions in the world, so Europe, Asia. And what we see, having been invested in European venture for 25 years, is that our realized returns are on par with the US. It's not to say that one's better than the other. The fact is that the maturity of the European ecosystem has more than arrived. And we can say that statistically because we've been here for the long haul. But the US and other parts of around the world have, taken a lot of limelight, deservedly so. And that's just meant that Europe's been a little bit kind of out of focus, let's say. But that's changed. We've seen in the last decade, huge amount of global champions come out of Europe. It's just really taken the world and made it stand up and pay attention. And I think we can see it in our own performance. You see it in the movements of the full stack firms. So the best Silicon Valley VCs out there, you can list them, whether it's Sequoia and General Catalyst and Lightspeed and Bessemer, and the list goes on. They've all got London offices today. They're all covering Europe because increasingly see the contribution of Europe into the global stage. So as we think about that as an asset class, we think Europe's going to increasingly contribute. Again, one of the positive lead indicators there, if you look at the number of startups, so these are seed stage investments, you'd be surprised to know that roughly a third come from the US. Maybe that doesn't surprise you, but I think it is surprising that the other third comes from Europe. And so when you've got a lot of international investors, LPs that see that for the first time, they're kind of taken aback. And I guess that comes back to my underappreciated point in terms of Europe really is competing. There are challenges and opportunities that come with that. But if we think it's taken us 25 years to get to the start line, we're really excited about the next 25 years ahead and how Europe's going to contribute and meaningfully represent itself on the global stage of venture capital.